Hey guys, how are you doing? I am so excited to be back home. I was able to recharge mentally, physically, emotionally, and I'm still here doing that as we speak. As you can see, I have my suitcase over here. I am packing, slowly packing to go back to Jamaica. For now, I'm just home, just still bringing you guys videos. We have some very good content today. I am so happy that you guys are following me. So what do you guys think about the videos? Are you enjoying it? I can't believe we're like over 200 subscribers now. You guys are really liking it. I love the comments. I like answering you guys back. It's sometimes hard to get back to everybody. That's why I will try to include some of my answers in my videos. But make sure that you guys continue to follow us. We have so much to do with this channel. And I get so excited. Every day I'm thinking oh my God, Donald, I'm gonna do this and I'm gonna tell them this. I've finally found my niche, as they call it, what I want to do, my calling. I love sharing this with you guys. I love hearing your stories about how you're motivated to do something. And when you have little issues, you kind of comment, and people will comment and say other things because we're all on this journey together. I have done it once, I'm doing it again, but I'm still learning. I have so much more to learn, and I thank you guys so much for your support. Let's get into the details of what this video is about, because if you clicked on it, you already know. And I think I told you guys, when I was in Jamaica, I specifically went to a few banks there, and I have a few more to go back to talk to loan officers inside the banks to get answers for people. And I'm just saying this more so for people that live abroad, because sometimes it's very, very hard to be able to get the information that you need over the phone, because you call, you may have a long wait time, you may never be able to truly speak to a loan officer. And even though websites do give you the little generic information online, you may have specific questions and you're unable to ask them. Now, I'm not saying that I asked all the questions that maybe you want to know, but maybe after listening to this video and my other videos that I am going to put out, it sets a foundation that you can build upon and you can ask more informed questions. I am going to do each bank in a separate video because it was too much to just try to clump all this together. Take into account that I don't work for any of these banks. Nothing is given to me from the banks. I just walked in to ask questions. So I'm not trying to tell you who to go with to seek a loan, but just so you can have all the information, you can weigh it and decide for yourself who's best for you to get your loan with or to apply for a loan in Jamaica. So without further ado, like I said, the first bank that we're going to talk about is Scotia. I went into Scotia and it was a very pleasant experience. I did not have a long wait time. Walked in the door, was talking to a loan officer within 15 minutes. They were very nice. So I did like that about them. So kudos to Scotia for that. The person that I talked to was in training, which he did disclose to me when I went into his office. He definitely told me that he was going to answer all my questions to the best of his ability. And if there was something that he was unsure about, he would just seek the advice of another colleague to be able to further answer my question and give me the information that I needed. So I really did appreciate that. His name was Patrick, and we talked for about a good 15 minutes. So the first question that I asked, which is a question that everybody wants to know, are about interest rates, because interest rates can really, really make or break you getting a home, because it ties into you being able to afford the home. So he did tell me that they have mortgages on the Jamaican dollar. Now, they do not do US dollar loans. Not saying that this couldn't change. Obviously, everything that I'm saying is subject to change. I know I sound like a commercial or whatever, but it's subject to change. And what I'm telling you may be different, but at least you have that foundation. So no US dollar loan, but the interest rate on the Jamaican dollar was between 8.25 and 8.49. Okay, so you hear those numbers, 8.25 and 8.49 on the Jamaican dollar. Now, something that he did bring up that I had never thought about, let's say, for instance, you really, really want to work with Scotia, but another bank is offering you a lower rate. It doesn't hurt to speak to your loan officer at Scotia and say hey, this particular bank is offering a lower rate. I really want to work with you guys. The terms seem to be similar. They are similar to what you're offering. Can you work with me on this rate? Not to say that they are going to do it, but you can ask. And that is something that you're going to hear me say a lot in my up and coming videos when I talk to the different lenders. A lot of times we just think what we see on paper or what they tell you at first is just black and white. It's null and void. This is how it is. Don't just think that anymore. I was even like thinking like, wow, I didn't know. I never asked. I just thought this is what it is. So just know that you're going to be hearing that a lot. Like things could be negotiable and you can ask. So put that in your things to do. Yeah, I'm going to ask. So if that comes up in your mind when you're talking to your loan officer, don't hesitate to ask for something different. Okay, the next thing is a lot of people have been asking me. I had one particular person that was telling me that she was 40 years old and she couldn't find a bank in Jamaica, or she had went to a bank and they had told her that she was too old to seek a mortgage with the bank. And I know that's not true because I know people that are much older than 40 that have obtained a mortgage in Jamaica, but now I'm telling you 100% that is not true because I went into the bank and we did talk about this at Scotia Bank. Now with Patrick, he did tell me that there's not an age limit. He was really stressing that if you see me looking down, it's because I took notes when he was talking, so I'm trying to use some of his words, but of course, everything that I'm telling you is just my interpretation of what he told me. So he said that they really try to look at you as an individual person, look at your profile and your ability to pay the mortgage. So just because you're 40 years old or you're 50 years old, don't think that you can't apply for a mortgage in Jamaica, okay? And it's nice that they look at you on an individual basis. So I hope that cleared up something for the person that wrote that. This is again just Scotia Bank that I am speaking about. And we're gonna go on to the next thing is down payment. A down payment is so important when it comes to buying a house because this is money that you have to come with up front. So with this particular bank, Scotia Bank, I did ask about Jamaican and foreign, down payments because sometimes there are differences, based upon where you're from. So in this particular instance, if you are Jamaican, they will finance up to 95%, which means that a Jamaican person would have to put down 5% of the purchase price. With foreigners, they will finance up to 75%, which means that you have to come with 25% of the purchase. So with that being said, you have to think about it. Are you going to have that, 25%? And I'm talking from a foreign standpoint. For me, that would be a little, hard for me to come up with. If I was trying to get a house, being that it's just a down payment, I would have to come up with the closing costs and everything, but that may not be the case for everyone. So if this is something that you feel fits you, then this may be the bank that you want to go with. Now let's talk about credit scores. Now, I know we have credit scores here in the US. I know they do it in Canada and maybe they do it in the UK. You guys let me know in the comments. Do you guys have credit scores and credit reports in Jamaica? I'm just curious to know. I didn't even ask Patrick about that, but I was just wondering. So I know a lot of people are stuck on a score, and I had even talked about that in some of my previous videos because that's what I was told. Oh, you have to have a 640 for that particular bank. But what I found out from talking to Patrick, and you're gonna notice that I may repeat this with some of the other banks, it's more so the person, your profile, and your history. Most importantly, the last 12 months prior to you applying for this loan. What's going on with you? How are you paying your bills? Have you been late with any bills? You have credit cards, so are you paying your credit card bills on time? How many credit cards do you have? Are they all maxed out? Or do you have a credit card, your limit is, $500 and you owe $499.99, so they're going to look at you and your money habits, your spending habits. Are you constantly, inquiring about credit, applying for credit? And these are things that your credit report shows. And so, your report just shows pretty much, it paints a picture about you, and then here, we give you a score for that. Now, what I will say is pretty much the score kind of coincides with the history, but I do feel, and this is just a side note, I do feel like credit reports and credit scores it's like all a game, and you you have to know how to play it. You have to know the things to do and things to do to get what you want. And you got to pay your bills on time. You know, you have to be this person that is not just always seeking out credit, maxing out credit cards and paying the minimum balance and just putting yourself in debt and getting into, you know, more debt. So there is good debt and there is bad debt. What debt are you in? Okay. Or what debt are you trying to get into? So there's a difference. And I think we all know that. Like, don't get scared because you're thinking about a score. So they don't have a specific number that they're going to give you. It's more so them looking at your history. Okay. So he also brought up what he talked about, DTI. I call it DTI. They call it TDS, and it was total debt to service ratio. And DTI means debt to income ratio, and that's what I'm more familiar with here. And I would always do these calculations when I was looking to buy a house because I would play around with the number. Now, if you don't know what debt to income ratio is, this is something that the bank will look at when they're qualifying you for a mortgage. So just very briefly, to sum it all up, it just means, are you going to comfortably be able to pay this mortgage on your income and with the current bills that you have minus the mortgage that they're going to give you, and then added with the mortgage they're going to give you? Are you able to pay your bills? Okay, so now they're looking at your credit history, how you pay your bills, what type of debt that you're in, and then they're looking at your debt to income ratio. So if you don't know how to calculate it, I can just, kind of run through it really quick. You basically take all the bills that you owe. You divide that by your gross income. So this is your income before they take out taxes, and you multiply that total by 100, and that's going to give you a percent. Now, with Scotia Bank, they don't want your debt to income ratio to be more than 45%. So that's on the high side. So needless to say, the lower that debt to income ratio is, or the lower that percentage is, the better you look, because that's less debt that you have in comparison to your income. So for instance, if all of my bills total $2,000 a month and I make $5,000 a month, I bring in $5,000 a month gross income before they take out taxes, what I would do is divide 2,000 divided by 5,000. Then I would multiply that total by 100. And in that particular case, it gives me 40% debt to income ratio, which would then make me in the range for a Scotia loan because they don't want you to go over 45%. I know a lot of banks here, they kind of want you to be in the, 30s as far as debt to income ratio. But, I think, again, this is an individual basis, because if you're a person and you have, a big savings account, you have a lot of investments, maybe you have a lot of liquid cash around, and you have a higher DTI. I'm not saying like astronomically high, but you have a higher DTI. They may take that into account. That I don't know, but you can speak to your mortgage officer. I would think that they would want to see something. Well, in a case of a person like, I know a person like me, I'm probably gonna have to stick to what Scotia would want. Now, I do want to tell you about something that I know the bank, Patrick and I didn't talk about this, but I know they do it here, and I'm sure you're evaluated for this in Jamaica. They have what's called a front end DTI, or front end debt to income ratio, and a back end. So the front end is basically just your debt before the mortgage divided by your income times 100. That's the front end. And the back end is that potential mortgage plus all the bills that you have. So the total inclusive of the mortgage divided by your gross income times 100. So they can evaluate, okay, so how much debt are you in before we give you this mortgage, and how much debt are you going to be in when we give you this mortgage? And the thing about it is, guys, and I'm just saying this, you don't want to ever put yourself in a situation that you're uncomfortable with. Yes, you are going to have emergencies. You still need to have some money in savings. You need a rainy day fund. You need to be able to go out to eat, to get coffee, to go on a trip, to go on a vacation. You need to be able to do these things. Now, if you are trying to do this for Airbnb purposes, of course, this is a little different because you're trying to get it for an income property. So a lot of times you will bring in income from this property. Well, not a lot of times, hell, you should be, because that's what you're getting it for, in hopes that this property should be paying itself off. I mean, that's like the gold standard. That's what we want anyway. So obviously things are a little bit different in a situation like that, but I'm just trying to give you some insight about, DTI, TDS, I'm saying those two are the same thing. And so now you know how to calculate your debt to income ratio, so you can sit at home and you can start to evaluate yourself, plus with your credit report, and evaluate everything as a whole before you even talk to the mortgage lender. And that's the whole point of me talking to you. So let's talk about fixed rates, because I know in the US we have fixed rates. We have variable rates and we also have fixed rates. Now at Scotia Bank, they do not offer fixed rates. Just to let you know that. The next question I had asked, are you going to have an account with the bank? And of course you are, because you're by the end of this process, you are going to have an account with that bank. So if you already have an account and an established relationship with the bank, then you're already a step ahead. But if you don't, just know that you aren't going to have to open up an account with the bank. So I asked them if they did any kind of discounts, say for your valuation, if you use people that they knew or they referred. They don't offer discounts, but what they do have, which this really doesn't have anything to do with your mortgage per se, but they have what's called a referral program. So if you are an agent, like a real estate agent, they do offer a referral of 1%. 1%. So you would make that, and I'm thinking 1% off the purchase price if you actually referred a client to Scotia and they were approved for a mortgage. You would then, make a little money. And not to say that the other banks wouldn't do that as well, but you won't know until you ask. So that's the key thing that I want to bring out in all the videos. Always ask and negotiate. Ask and negotiate. So I definitely want to talk about self-employed people, because a lot of people will think, oh, I'm self-employed, I can't apply for a mortgage in Jamaica. Yes, you can. You can apply for a mortgage, and Patrick did tell me that when I was talking to him. Now, he also included just a little bit more information, so I just wanted to pass it on to you. He did say that Scotia will use 30% of all your deposits as your monthly income. Okay, so 30% of everything that you deposit into the bank, that total would be considered disposable. So I guess that's how they would then decide how much they would approve you for a mortgage. That is the number that they would use, 30% of all your monthly deposits for the month. All your deposits, 30% of all your deposits for the month. Okay, so I just wanted to just bring that up. So yes, self-employed people, you can then use this and try to do a little calculation and try to figure out what you would do it. And again, like I said, you have to talk to a loan officer to let them know your specific situation. I'm just telling you a general thing. But it just makes me happy to, let people know, because I know a lot of times people that are self-employed have a really, really hard time and they get denied a lot just because of their status of self-employed. But everybody has a different situation. You can have a lot more money in savings, or you can have a lot of liquid cash, like I said. So talk to the loan officer to see what your specific situation would equate to with the bank. So can you use rental income or Airbnb income as provable income for you to help qualify for a home? And that answer is yes, you can. So if you have a job, but you also have an Airbnb and you're making rental income, and this just doesn't have to be Airbnb, maybe you're just making rental income from a property that you already have, you can then tie that into, say, your income from your current job that you work at, to combine those as provable income. Now, I know for me, I didn't ask him what the time frame was that you had to have it, but I know for me, when I got mine, I was able to use my Airbnb income as long as I had my Airbnb for a year, 12 months. So I did ask that. So the last question that I was asking him is, let's say you apply for a loan, and this is kind of like a summarization, because someone wanted to know how many people could be on the loan. So, I mean, if you apply for the loan and you don't get approved for the loan, maybe you may need a co-signer or someone to come in on the loan with you. So, just keep that in mind. But, I don't think anyone's going to go in trying to put like not more than 2 or 4 people on the loan just to qualify for a loan. I don't think he had really seen anything like that. I don't think people do things like that, but someone had asked me. But usually, you go in, you try to get the loan, or you may go in with a second person, like a spouse or a friend or a partner. And it's usually just because maybe you wouldn't qualify for the loan. Now, when it comes to the title, that would probably be something different. You probably could put multiple people on the title, but this is not something that Patrick told me. This is just me talking to you guys now, because those were the questions that I did ask him. I hope this was like informative for you guys. I was really excited to ask him these questions, and these were just questions that I wanted to know when I was trying to get a house. So I am going to just wrap this up with my talk with Patrick and Scotia Bank. I am definitely going to leave their contact information below in the description. So I have like a lot of 1-800 numbers, so toll free if you're calling from the States or Canada or UK. And also I'll leave the local number if you live in Jamaica. Please reach out to the bank if you found some of what I was saying very interesting and you feel like it's a good fit for you. If not, I have a few more other banks that I visited, so you definitely want to stay on the lookout for that video, and I am going to record it. This was a little bit harder than what I thought it was going to be, recording a video like this, because I'm just used to just talking what's in my mind and not really like not quoting someone, but summarizing something that someone else told me. So this is a little bit different, but I really enjoy bringing this information to you, and I can't wait to bring you the other videos. And what do you guys think about this? Did I ask some things? Was it helpful to you? And also, if you are a person that works for Scotia Bank, or if you work for a bank, or if you're a lender, or just someone that can bring any clarity to anything that I said or I need to be corrected, and you truly actually work for this bank, definitely do it below, and I'll see it in the comments. I hope that I was able to bring across my conversation with Patrick in a really good way, and that you guys are informed. He was very nice, like I said, very knowledgeable about things, and I just really hope that I was able to display that in what I said to you guys, because I be getting nervous sometimes talking to you guys, just to let you know. But like I said, I'm not a professional, but I just want to share with you whatever I can to just help you along with your journey and to get started. It's still the beginning of the year. It doesn't matter. There's always time to get up and just start fresh. Like, start fresh. Whatever you need to do, stay motivated. I'm motivated right now, and I'm trying to help you. So get up tomorrow, get that notebook out, check those credit reports, and call the bank. If you're in Jamaica, go to the bank, and I will see you in my next video. The next bank that we are going to talk about is a bank called First Global Bank. I did visit that bank, and I can't wait to bring you that information. So bye for now, and get ready, because we're going back to Jamaica, you guys. We are going back to Jamaica. Thumbs up, like this video, give me a comment, and I will talk to you in my next video. Bye.